My name is Farhan. In today's video, you will solve questions 1 to 10 from 2022 Paper 2 Past Exam. Make sure to like this video and subscribe to this channel. Also, with any topics that you need help with, make sure to post them down in the comments below. Question 1 says, which of the following does not have an interest charge? Now, the interest charge here relates to an interest expense, which is a finance cost. Now, a finance cost is relevant to any debts that the business takes. If you check each of the four options we're given, we can see that bank loan is a debt, debenture, which is a loan to a company, is a debt, and then we have mortgage, where you get a house and pay it off over 30 years, that is also a debt. The only option that is not a debt is the ordinary shares. The ordinary shares cannot have interest expenses, unlike debt. But ordinary shareholders refer to investment in a company. You can buy 1% or you can even buy 0.1%, and you would be called an ordinary shareholder. Because of the investment that you have made, if the company makes profits and if the company has decided to pay out dividends, you get to earn a portion of those profits as dividends. So, which is the return that you get by investing in an ordinary share. So, the cost of ordinary shares, or the equity, which in this case we are referring to, is the payment of dividends. But for a loan, it's always interest expense, which is what we can see for the first three options: bank loan, debenture, and mortgage. Therefore, the correct answer to select for question 1 should be option number D, which does not have an interest charge because it's not a debt instrument. Rather, it is an equity instrument, and by being an ordinary shareholder, you get to earn dividends, which are the share of profits in a company. Now, moving on to question number 2, which is the correct formula for trade payable days? Now, you can see the formula on page 33 of the syllabus. Trade payable days simply refers to the measurement of efficiency in cash flow management. So, what we understand by that is the ability of a business to pay off its obligations. How sooner within a year can a business pay off its obligations towards its credit suppliers? So the formula is given on page 33 straight away, which is option number D in this case, which is the portion of trade payables out of the total credit purchases that a business has made and multiplied by 365 to convert it into days. So you can get to know how long it takes for the business to pay off its credit suppliers. Moving on to question 3. A business has budgeted that overheads for the maintenance department will be 20% higher than last year's figure of £15,000. So if that is the case, we can simply find the new overheads by taking the last year's overhead of 15,000 and then multiplying it with 1 plus 20% to account for the additional increase, which gives us £18,000. So last year it was 15,000, this year it's 18,000, which reflects a 20% increase compared to last year's value. Maintenance overheads are apportioned using the net book value of machinery. So you have two departments that are given here, and each of these departments have machinery with their relevant net book value. The net book value here refers to the value or the economic benefit that is still left within this machinery that is to be used within the business. The question is asking the correct amount for the maintenance overheads to be apportioned to Department B for next year. We already understand that maintenance overheads are apportioned using the net book value of machinery. So what we have to do is first find the total net book value for both Department A and B combined. So you add 750,000 with 450,000 and you get 1.2 million. Then, since we are interested in knowing the maintenance overheads that we are going to allocate to Department B, we need to know the proportion for Department B. The proportion for Department B here can be calculated by taking what belongs to Department B, which is 450,000, and then dividing it with the total net book value of 1.2 million, and then multiplying it with 18,000. That's the maintenance overhead. What this simply means is that given that the total maintenance overheads for the current year is 80,000, how much of that gets allocated to B? It gets allocated based on the net book value proportion. B holds $450,000 pounds worth of machinery, which divided by the total of 1.2 million multiplied by 18,000 should give £6,750 as the maintenance overhead that should be allocated to B. So on that basis, the correct option for question 3 is option number B. So let's move on to question number 4, which is the correct formula for earnings per share. Now, earnings per share simply refer to profit after tax divided by number of ordinary shares. It's very straightforward. Earnings per share. So earnings is the numerator, which refers to the profit after tax, and divided by the number of shares, which is the per share that we're referring to. Again, you can check this formula on page 33 of the syllabus, which should have the list of all the formula that we need to know for the exam. Question number 5. Jude is a professional accountant and needs to attend a training course on recent changes to company law. Which fundamental ethical principle is Jude complying with? Now, what does a professional accountant do? An accountant not just only prepares the financial statements, but also engages in assisting the business owners with decision making in terms of the yearly expenses, the yearly income, the amount of assets that are in the books, how much money can the business allocate for reinvestment purposes, how much can the owner withdraw from the business, what assets should the business purchase to ensure the maximum revenue or profit. So there are a lot of things that a professional accountant needs to take care of. And if it is relevant to company, as you can see, the question says the professional accountant needs to attend a training course with regards to recent changes to company law. Now, company law, if there are any changes, these changes have been mandated by the government. So the professional accountant needs to attend all this training and courses to be up to date with what the government requires in terms of preparing the financial statements and providing value to their customers. So therefore, this ethical principles complies with professional competence and due care, which refers to an accountant being always updated with requirements that are required by the government in the UK, for example. So the correct answer in this case is option number D, professional competence and due care. We could look into the other options as well. If you think about confidentiality, it's, for example, whatever is between you and me. So if I'm the accountant, I'm supposed to not disclose this information to anyone else. It's simply private between whatever discussion we have in terms of your business. Then integrity also is the same thing. We have to be honest as accountants in our dealing with our clients. Objectivity, the objectivity is to serve our clients and ensure they get the best service. So it all falls within the fundamentals of ethical principles that you need to be aware of. So you could memorize these 4 fundamental principles as well. So question number 6, which of the following is not a benefit of budgeting? Now, the first option says budget helps calculate the actual profit, and you can see that I have crossed this out straight away and selected this as the correct answer. And it might make sense because you can never find the actual results just by doing the budget. Budget is just there as a standard, as some form of strategic formulation or planning. So what we have to do in this case, so you can look into the other options that we are given. Budget helps coordination between departments. That makes sense because if we have some numbers that we have set in place for cost and the amount of units that we are likely to produce and the cost that we would need to incur for getting the raw materials for all those units, this helps management plan how to control spending. So budget is mainly there to help the business formulate everything and do their best in ensuring that those standards that the business requires are met. It is not the actual result, and therefore the straight answer in this case should be option A, which is not a benefit of budgeting because you can never find the actual profit. You can just set standards for the business that you need to hit on a quarterly or on a periodic basis. So question number 7, which of the following does not apply to management accounting information? Now, management accounting is relevant to internal preparation, also budgets, also variances, finding the break-even point, calculating the contribution per unit, maximum profit, marginal costing, standard costing, activity-based costing. There could be many more. So the emphasis is on decision making. That makes sense because management accounting, as you know, we include budgeting. So budget is important in order to help decision, in order to formulate the best strategy for effectively running the business, and therefore this becomes part of decision making. It generally focuses on the needs of internal stakeholders. That's also true. So the internal stakeholders within the business refers to coordination or communication between various departments to ensure the optimum results for the company as a whole. Then we have it is produced within a regulatory framework. No, management accounting is what happens internally. It's not produced within a regulatory framework. Regulatory framework refers to financial statements prepared in accordance with the guidance that is set by the accounting boards. And that is more of a financial accounting perspective rather than a management accounting perspective. And therefore, the correct option for question 7 is option number C. Because of the words regulatory framework which are mentioned, we can confidently select this answer for question number 7 as not being a part of management accounting, but rather a part of financial accounting. Let's move to question number 8. Samia is a sole trader. The following information relates to the account of C. Lewis, a trade receivable for the month of May. Right? And you can see we are given the amounts owed on 1st of May, amounts owed on 31 May, credit sales, receipts, and return inwards. We do not know. The question asked us to find the value for the return inwards within the account of C. Lewis. All right, so you can see that I have prepared a sales ledger control account which tracks the total amount that a business owes to its trade receivables. Now, C. Lewis is a trade receivable who is a credit customer. So the credit customers are those people to whom the business has sold goods on credit. So these people or these credit customers are an asset for the business. And because they're an asset for the business, the opening balance should always be on the debit side. Now, you can memorize the format for the sales ledger control account, but it's most important that you understand the logic behind why the format is according to how it's appearing here. So we understand that credit customers are assets of the business, and all assets by default should have an opening balance on the debit side. So that is why you can see I have written OB for short here, which is opening balance. You can also write balance BD, which stands the same as opening balance. And that is 560, which refers to the amounts owed on 1 May of 560. Then on the credit side, we have included closing balance of 425, which refers to the amount owed on 31 May. Now, during the year, if we are making any credit sales, that should increase the amount of assets for the business because more credit sales mean more customers owe the business money. And when assets go up, they need to be debited. So that is why within the sales ledger control account, we have shown sales of £210 on the debit side, which refers to more credit sales that the business has made. Then we have included receipts of 160. So receipts of 160 refers to the collection of cash from our credit customers. So if we collect cash from our credit customers, that is going to result in a reduction in the balance that our trade receivables or credit customers owe us. And therefore, if there's a reduction in asset, although bank is increasing as an asset, but still when the customer has paid us off, they're also going down in value in the books, which is what we need to reflect. And therefore, within the sales ledger control account on the credit side, we have shown bank as 160, which reflects the reduction for the specific group of people who are the trade receivables of the business. And then the return inwards is the balance that we had to calculate ourselves. So what we did was first found the total of the opening balance and the credit sales on the debit side, which gave us 770. And the fundamental rules of accounting need to apply here. Therefore, the credit should also be the same as the total on the debit, which is 770. From there, you subtract the bank or the receipts or the collections from credit customers of 160 and the closing balance of 425, which leaves us with 185 as the balance that we set aside for return inwards. So I've written RI here for short. Now you can see I have selected option C. This is because the 185 is on the credit side of the ledger or T account, and therefore C is the correct answer because it has pound 185 credit. Okay, so let's move to question number 9. Holly owns a wholesalers. She gives a discount to credit customers who pay within 30 days of the sale being made. Now, the discount that Holly gives to credit customers is what we call a discount allowed for prompt payment. Now, if Holly gives a discount, so if Holly has discount allowed, that refers to Holly having an expense. So any discounts that Holly is providing to her credit customers for prompt payment is an expense for the business. Always remember, discount allowed is an expense and therefore should always be debited. So I've made that note here. Discount allowed is an expense. We have Abu, a trade receivable of Holly's business. So the trade receivable here refers to a credit customer. Abu is the person to whom Holly sells goods on credit. And this guy, Abu, settled his account within 15 days. So that means Abu is eligible for discount based on the requirement that Holly has set aside, which is to make the payment within 30 days. So since Abu qualifies for the discount, what is the correct book of prime entry and double entry for the business to record the discount allowed in this transaction? Now, book of prime entry refers to what's the first place where we are going to initially record this. Now, Abu will be getting the discount on prompt payment for the balance that Abu owes to Holly. So when Abu is paying Holly, Abu is using bank funds or cash, and that is where the first that is where the cash book comes into existence as the first place of record. So within the 3-column cash book, we have to reflect this, and discount allowed is an expense. That is why it is debited, and Abu is being credited here because it refers to the fact that Abu has paid off his dues and therefore is no longer an asset for the business. And when assets go down in value, they are credited. That is why the correct option for question 9 is option number A. So moving on to the last one, the following information is provided for a business for the month of February. We are given the closing inventory, we are given the production, we are given the sales. Which is the correct opening inventory figure for the production budget for February? Now, this is very intuitive in terms of approach. You can just use simple logic and answer this question. So we understand that we are required to calculate the opening inventory here. Now, let's just assume to begin with, we do not know the number for opening inventory, and this is something that we have to derive ourselves based on the equation that we're going to write. So with opening inventory, you add production. Why we are adding production? Because that increases the total amount of inventory that are available in the business for resale purposes. And then I subtract sales, which refers to outgoing of inventory, because if we are subtracting sales, that means we are getting rid of some inventory. You see how for production we have added it, but for sales we're subtracting it. So opening inventory plus production minus sales, and then all this should give me the closing inventory that should remain in the books of the business. Now we know the closing inventory is 45 based on the table. We also know the sales is 540 and the production of new batch of inventory is 460. So you can just pick any of the 4 options that are given here and place it here. And whatever gives you 45 should be the correct option in this case. So we can see that 125 is what makes the most sense because it gives a closing inventory of 45, and therefore the correct option for question 10 is option number D.